October 7, 2020. W-2 versus 1099 versus both. There we go. Sorry, I couldn't hear myself. Here we go. This is 39.6 Facebook Live and YouTube Live Finance Show. The show that teaches high earners like yourselves how to make your money work for you so you don't have to work for your money. Talk general investing, taxes, real estate, Airbnb, syndications, paying for college, paying for childcare, and even the car you drive. Today, we discuss W-2 versus 1099 or both. Question from the Facebook community by Gaurav. Thank you for your question. All right, so I'm going to try not to make this one too long of an episode. We'll hit on the main points here. So first of all, W-2 is an employee and 1099 is an independent contractor. Okay, so from a tax perspective specifically, if you're an employee as a W-2, you have to pay Social Security and Medicare on your own behalf. Social Security is 6.2% up until you hit $137,700 this year. Medicare is a 1.45%, and you pay that amount up until you hit $200,000 as a single person. If you go beyond that as a single person, it goes up to 2.35%. If you're married, it's $250,000, I believe, is where it changes between single and married. So, but there's only two tax brackets for Medicare, 1.45 and 2.35. There's only two tax brackets for Social Security, 6.2 and 0. It's the only tax that has a ceiling. Okay. That's the employee side, if you're an employee. If you are a 1099 independent contractor, you are your own business. So you pay the employee side, the 6.2 and the 1.45% of Medicare and Social Security. But you also will pay the employer side, 6.2% and 1.45%. So it's literally double the amount of FICA tax. So instead of being 6.2 plus 1.45, 7.65%, it's actually 15.3%. That extra Medicare tax for the high earners over 200 or 250, that's only for the employee, not for the employer. That's an additional Medicare. I think that was like an Obama tax. Okay. So you pay more payroll tax as a 1099 contractor. Okay, so that's like the easy part. So if you are looking for a job and they are offering you one or the other, and the pay is exactly the same, one, the 1099 person is going to be paying more tax because you're paying Social Security, Medicare for the employer. So it's cheaper for the employer if you're not a W-2 employee because they don't want to pay payroll tax. It's also cheaper for the employer if you're a contractor because they don't want to pay for all your benefits. If you're a full-time employee or even a part-time employee, you can get benefits. And those benefits cost the company money and resources. It costs time and effort to actually coordinate all these resources. It's actually a lot of work, especially for small businesses, to manage all of these benefit packages. But healthcare, dental care, disability, retirement accounts, FSAs, HSAs, all of these things utilize a lot of resources, and then paying for unemployment and all these other taxes you have to deal with and pay as a company owner. So a lot of companies would love it if their people were all just contractors and they didn't have to deal with any of that stuff. Okay, and they don't want to pay the benefits either. So I know a lot of companies will hire people only to be part-time simply so they don't have to give them benefits. So it's cheaper for them. It's cheaper for them to have like 3 part-time employees than 2 full-time employees, for example. Okay, so if you are a 1099 contractor, you would want to have more compensation, one, to cover the other half of payroll tax, Social Security, Medicare, but also additional compensation to cover your own benefits package that they're no longer paying. So if you include like medical, dental, blah, 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 and then like a 401k match, I mean, depending on how this is, I mean, this could easily be $20,000, $30,000 per employee. So you have to take that into consideration. The smaller your income, the higher the percentage of your compensation package's benefits. Okay, so it can be a lot of your compensation. However, let's pretend they were to pay you extra. They were to pay you like an additional $20,000 or $30,000 plus another like 10%. So I say about 10% because that will help cover the Social Security, Medicare, depending how high your income is. Social Security, remember, it caps out when you hit $137,000. So if you make a ton of money, Social Security might only be like 1% of your income. But let's just say they offer like an additional 10% compensation plus another $20,000. So what I mean by that is if your options were $300,000 as a W-2, but then they offered you like $350,000 as a contractor because 10% extra over the 300 would be 330 plus an extra $20,000 be 350, then those would seem to be pretty comparable to me. Okay. The big advantage to 1099 is because you're a business owner, you can take deductions. One of my biggest pet peeves in so many groups and people's questions are, well, if you form an LLC, then you can take all these deductions. No, that's not how it works. If you own your own business, you can take all these deductions. It doesn't matter if you're an LLC. It doesn't matter if you're a sole proprietor. LLCs are state-regarded entities. If you're a single owner LLC, you are a disregarded entity from the federal federal standpoint. It just flows straight through to your Schedule C as a sole proprietor. You do not need an LLC to reduce your taxes. You can make all these deductions because you're a business owner. Okay. Then the question can be if you file as an S corp or not from a tax perspective, but that's really just to save you on potentially Medicare savings. Okay. Or Medicare plus or minus Social Security, depending what your income is. But if you're 1099, that opens up the door gigantically to what deductions you can take and what benefits things you can open up for yourself without having to worry about all the other employees that make it more difficult to qualify for certain opportunities, like a cash balance pension. That's a number one. If you have no employees, opening up a cash balance pension is so easy because you don't have to worry about underperformance or overperformance because it's all your own money anyhow. You don't have to worry about making sure that they are getting enough money so that you're not discriminating against them. So that is your biggest tax benefit from an investment standpoint is a cash balance pension as a high earner. So being a 1099 opens up the door to that. You can also do a solo 401k and get $57,000 into that. Now, if you have both a cash balance pension and a solo 401k, you probably can't get the full $57,000 into the solo 401k and do the pension to the max as a solo person. But if you don't do a cash balance, you can easily get $57,000 in there as long as you make $285,000 as a sole proprietor. And if you're filing as an S corp, you need less than that, like maybe 200-ish, maybe a little less. Okay. If you're a W-2 employee, your employer match to your 401k or 403b or 457, those are limited to however what much percentage they're like matching you to. It may only be 4% of your income up to $285,000. So it could only be $11,000 or so. Whereas in a solo 401k, you could have $19,500 going as an employee, which is the same as a W-2. But you could then add in on your own up to $57,000 to fill it up. So that's another $37,500 instead of like $11,000. So you can put a lot more money into retirement accounts likely if you are a 1099 contractor. because you have all those options. Now, if you're a W-2, you may have access to a 457B, which is nice. And you could have access to a cash balance pension as well. It's just less common in W-2 because there are more difficult programs to open up in big organizations. But certainly you could do that if you could get your plan to open one or if they already have one. Then you have all the deductions, the business deductions. With a 1099, any business-related expense, you can just deduct it off of your business income and not pay tax on it. As a W-2 employee, unless your employer is going to reimburse you those costs, you have to basically eat those costs. You don't get a deduction on them. Unreimbursed employee expenses used to be deductible on your Schedule A before the Tax Cut and Jobs Act, but only the amount that exceeded 2% of your adjusted gross income. If your adjusted gross income, married filing jointly, was, let's say, $300,000, 2% of that would be $6,000. So if you had $8,000 of unreimbursed job expenses, you'd have to subtract $6,000 from the $8,000. That would leave you with $2,000 left, and you would be able to take a deduction of an additional $2,000. That could save you like $500 if you're at a 25% tax bracket, for example. Right now it's 22 and 24%, but just as an example. So you could deduct unreimbursed employee expenses on the previous tax methods, but not currently. So being a 1099 opens up a lot more deductions. Okay, home office, car, things like that, without any limit. If you're an employee, they're only going to let you get reimbursed for certain things up to certain amounts of money. So now, if you have benefits from a spouse, you don't necessarily need benefits like medical, dental from your own job. And so being a 1099 is not as disadvantageous. Now, you can always get those kinds of benefits on your own, but it may be a lot more difficult to get a medical insurance plan that you want or a dental insurance plan you want, etc., as an individual person because you're not part of a group. And so some people are not readily insurable. And so the options you may have, if any, may be limited based on what you want. For example, group term life insurance policies. I heard about a physician who unfortunately passed away this year from cancer and didn't have any life insurance. And I was shocked because the person had cancer for over a year and didn't have a life insurance policy. I was like, why did the person not have one from his job? I understand that he couldn't get one privately, but from your job, why wouldn't? Well, the person worked for a small business, small group, and they just didn't get one for that group. Whereas if he were an employee, for example, in a larger an academic institution, a group term life policy would have been standard. So, and they wouldn't be able to not give him a policy. So these are things you all have to balance. Now, both W-2 and 1099 for the same person doesn't really necessarily work at the same job. You really need to be classified as one or the other by that company. I've seen some exceptions, but as a general rule, you should be one or the other. And definitely in the same year, like the least ideal situation is to switch in the middle of 1 year, because if you've already done W-2 work and I've already been paying into Medicare and Social Security, and then you switch jobs or situations to 1099 at the same place, now you're paying for those FICA taxes all over again. So you can actually end up paying a lot more FICA tax because you have those two jobs and you're basically paying now the employer side of Social Security again. Like that's a very not ideal situation. You really want to be either one or the other for an individual person at an individual job. If you're talking about your spouse having one and you having the other, that's completely different. It's also different from having W-2 at a job that you have and 1099 at a second job you have. Okay, so it's a little bit complicated, but in general, the same job, it doesn't really make that much sense. And from an IRS legality standpoint, it also doesn't really make much sense unless you really have some official change in the way your job is characterized as one or the other. Lastly, if you are in a private group and there are shareholders, like in a partnership, if you're a contractor in general, you're just a contractor and you're just getting paid to do a job. You're not usually going to be able to be a partner of a company and get a 1099. Now, I know there's exceptions to this and the way some places are structured, absolutely. But you want to make sure that any of that potential upside by being a part of a partnership is not negated by choosing to be a 1099. There are like ER groups or anesthesia groups where everybody's paid as a 1099, but you can still be a partner in the group just because the way they have it structured. Okay, that is true. But in a place where most people are employees and they're partners, and then you come in as a contractor, it's a lot less likely that you're going to be able to be considered a partner and get paid partnership distributions and enjoy the profits of being part of that partnership. Like our company, unfortunately, pays us all out on W-2 income. I wish we were paid out on K-1s. It would save us a lot in Medicare tax, but it's very complicated because of the way our system works, and we get paid based on our collections, not based on our shareholdership, because we all have the same number of shares, basically. So they want to be able to give us variable compensation based on collections. So anyhow, at the moment, we're still getting paid 100% on W-2, which is not ideal. But that is the way it is. But we also get to enjoy the distributions of being partners, which are very large. So it's worth it. But it's just not the most efficient way to do it. All right. There you go. W-2 versus 1099 versus both. All right. Everybody have a good night. Until tomorrow, October 8th. That's it for episode number 94. Again, this is strictly for entertainment purposes for myself, hopefully for you. Not legal, not accounting, not financial, not any other advice. Please consult with any of your professional advisors prior to making your own decisions. Have a great night.